Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, June 23rd, 2021, and I'm pre-recording this Trading Places Live for Thursday, June 24th. Futures currently are pointing to a higher open on Thursday. We'll see if that holds overnight, but currently we have Dow futures up 113 points, S&P 500 futures up about 11 points, and the NASDAQ futures up 36 points. So the Dow showing a little bit of leadership there, but all three up at least about 0.25% or more. Before we get into things today, let me run through today's agenda. We will start off with the daily market recap, as we always do. Then we'll get into talking technically, chart breakouts, earnings spotlight, and the three you must see. We'll wrap up as we always do with the three you must see. Before we get into the daily market recap, let me take you over to earningsbeats.com. For those of you that are new, you can subscribe to our free Earnings Beats Digest newsletter. Simply type in your name, email address, hit that subscribe button. There is no cost. It's 100% free, no credit card required, and you can unsubscribe at any time. The newsletter is published 3 times a week, Mondays, Wednesdays, and Fridays, normally delivered about an hour before the market opens. Sometimes there are solid trading candidates featured in there. Other times we have educational articles talking about relative strength, earnings, could be historical information, could be seasonality charts, really a lot of different things that we feature in that newsletter, but it does give you an opportunity to follow along with some of the things that are important to us at Earnings Beats and hopefully can help in your trading. Moving on to the daily market recap for Wednesday. The Dow Jones Industrial Average down 71 points, the S&P 500 down 4.5. NASDAQ, though, set a new record, gaining another 18 points, closing at 14,271. So that is a new all-time closing high. Mid caps finished up slightly along with small caps. So for the most part, it was a good day, although a little bifurcated based on the weakness that we saw in the Dow and a little less so in the S&P 500. From a sector perspective, discretionary stocks led for the second straight day, and we have now made this breakout. We filled that gap that we saw back on May the 10th. We did that on Tuesday, and we extended those gains on Wednesday. I think that's really good action there. Energy, getting back up close to the 56 level. I'm going to talk a little bit about energy. I think this 56, 57 area could be very difficult to negotiate, and I'll talk about why in just a few minutes. Utilities, the worst performing group, down 1% on Wednesday. You can see actually closing down below the 64 level. I'm kind of surprised we went down that far, but and especially with treasury yields moving back down, because that makes those utility dividends look even better for income investors. But we don't argue with the price action. We did see a breakdown. You can see the volume has been picking up on the selling as well. Moving on to the industry groups, automobiles, very strong day. Tesla had a good day. Ford also had a good day. We can see the autos breaking out after a move up in late May. We went through this period of maybe a little bit of an ascending triangle or a bull flag, however you look at it. They're both very bullish patterns, especially once you get the confirmation on the move to the upside, and we got that on Wednesday with the autos. So the group up about 4.5%. I think it looks like it's poised to go higher. We'll find out on Thursday. Bank stocks also had a pretty good day, nowhere near the percentage gains that autos saw. But after a lot of selling so far in June, it was good to see banks close up for the third straight day. First time we've done that this month. Have a little bit more room to the upside, but I do think that 560 area could potentially pose some big problems for the banks after failing to move back up through, I don't know, maybe about a week or so ago. You can see we gapped up, couldn't get through either of the moving averages, and then had another big sell-off. So I think as we get up close to that 560 level, we'll want to keep an eye on the banks, see if not, or see if we can get through. All right, moving on to the 10-year Treasury yield. I do want to go over some of the economic reports that'll be out Thursday morning. Some of these out by the time you get this recording. May durable goods expected to rise 2%. April was down 1.3%. I will tell you, though, that this is a report that has a lot of volatility. So if you're going to look at durable goods, you probably want to smooth it out, use a moving average over 3 or 4 months. Otherwise, I'm not sure that this is very meaningful action because we do see huge moves in both directions. If we strip out transports, the durable goods are expected to rise 0.7%. April rose about 1%. So we're looking for a little bit of pullback there. Q1 GDP final estimate is due out in the morning. We're expecting to see 6.4%, which was the same that we saw last month with the second estimate. So no big surprises expected there. Initial jobless claims last week, if you recall, we had a jump up above the 400,000 level to 412,000. We're expecting that to come back down to 380. And then finally, May wholesale inventories, looking for a reduction. April was rose 0.8%. In May, we're expecting 0.4% rise. Looking at the 10-year Treasury yield, nothing really changed on Wednesday. We continue to trend lower. We're beneath both the 20-day and the 50-day. Price action beneath it. You can see that PPO's in negative territory. So just not looking very good, and that has certainly had a negative impact on financials, which have been underperforming, as well as industrials. Industrials have moved down to about a 4-month low on a relative basis. Financials still holding on to that April relative support, but probably going to need a bounce in 10-year Treasury yield, or that level could go as well. All right, moving on to talking technically. One chart I continue to pull up. I want to continue to watch this. Growth versus value, you can see it had been trending down. We're continuing to now trend back to the upside. That PPO is as strong as it's been. It's a relative PPO, but this is as strong as it's been since all the way back in September of last year when growth was in favor. So that is one very good positive for growth stocks right now. And down at the bottom, I have RSI, and I just want to kind of show you what I think is the best way to use RSI on any chart. And that is when you're in an uptrend. RSI is great when you're in an uptrend. Normally, RSI 40 provides good support during any pullbacks. And many times during an uptrend, you will see the RSI move above 70 and move into very overbought territory. And you can see during this entire advance that took place for, I don't know, maybe about 10 months or so, we saw the IWF, IWD, RSI move into that very overbought area on a few different occasions. And when we pulled back, you can see the RSI for the most part held 40. We had one little glitch there in early June where we went just a little bit below 40 and then bounced right back up and went to another new high. All of that is telling us we have an uptrend in play. Now, once we rolled over in November, that's when we had the positive vaccine news out and a lot of money rotated toward those value stocks, many of the reopening stocks. Check out what was going on with the ratio. Instead of having support at 40 and highs, up above 70 in the 80s and very overbought there, now things have flipped. And from November through the end of May, you can see we actually moved down into oversold territory. So we move below 30, and to the upside, 60 becomes the level of resistance. So when you get a bounce and you get to that 60 level, you can almost expect that you're going to roll back over. Now, what we've seen in June here, notice the low went down to 40 here on this slight pullback. And now on this move to the upside, we didn't stop at 60. We went up and actually hit overbought territory. So this is telling me we've had enough strength now to get that relative RSI back above 70. That tells me that we've got momentum on our side and that growth is now back in an uptrend versus value. And that's how I would view this unless we see something to the contrary technically. So I love this breakout above the high that we saw in April. I love getting back through that 170 level. So a little bit more strength would be even more helpful. And I like the way that this RSI is acting. So I think we've got a situation where money is now convincingly rotating back toward growth stocks. And that makes sense as we begin to approach earnings, which will be out in about another 3 to 4 weeks. We'll start earnings season. All right. The other chart I wanted to look at today in talking technically is the energy chart, the XLE. And I said earlier that I thought $56, $57 could be a problem. Now, this contradicts a little bit the measurement on crude oil prices, which is expected to move up to about $77 a barrel. Right now, we're at 73. So it does look like energy or crude oil could move up. And if that moves up, you would think the XLE will move up as well. But I do want to just identify, if this is a 3-year daily chart, and you can see recently here in June, we got up to about 56 or a little above $56 on the XLE. Check out all of these prior highs going back the last 3 years. I mean, 57 to about 60 has been a very difficult area to try to get through. So we're at 54 and change right now. I do think crude oil could go a little bit higher, but if the XLE moves back into this zone between 56, 57, and all the way up to 60, I would be thinking about taking profits and waiting and seeing if we can get through, because there's just too much history in this area of resistance. And I'd want to be very careful that I don't just follow it right back to the downside. I don't want to keep holding on. The other thing is, down at the bottom of this chart, you can see the XLE relative to the S&P 500. And if you remember that June low, that June RSI that I was showing you on growth versus value, at that same time, money had rotated into energy. So that was this is one of the value plays and away from the growth area. And so we topped on a relative basis in that first week of June. And notice what happened in March when we came back up and hit that level. Quickly, we turned back to the downside again. So even though we've moved up to new highs on the XLE, it's mostly because of the old adage, a rising tide lifts all boats, because I think the market's going up, and so energy kind of went up with the market. But on a relative basis, energy has not been leading for the last 3 to 4 months now. We hit that relative high back in the first week of March, and we haven't been able to break back out since. So yes, energy's been going up, but no, it is not leading this market any longer. And the final thing I'll show you here in the Talking Technically segment is the dollar. If you study history, you know that when the dollar's moving up, energy tends to struggle on a relative basis, as do the materials stocks in general. Well, after moving down for the last couple of days and having that island reversal that we saw on the UUP, we actually had another reversal coming back up today. We had a piercing candle print off of this downtrend. So I don't know if we're going to turn back to the upside or not, but it certainly looks like we could. And if we move back up and make another breakout on the UUP, I find it very difficult to believe that energy is going to break out on a relative basis versus the S&P 500. So keep an eye on not just the XLE, but keep an eye on the dollar to see what's going on here. We have a double bottom in play. If we were to go up and take out that 25.15 area, that would be very bullish for the dollar and very bearish on a relative basis for energy. All right, let's move on to chart breakouts. I wanted to show you how you can use the StockCharts platform to get to these breakouts in the way, I think an easy way to do it. If you go into your dashboard and you scroll down, you should see your scans. If you don't see that, then you need to come over here to this little gear shift and click on this and make sure you've checked off scans and alerts. If that's not checked and you save and then you go down looking for your scans, you're not going to see it. So you got to come up here, click scans and alerts, save preferences, then go down. So once you're at this, your scans, there's a drop down on more. If you click on that, it'll give you 3 choices: advanced scan, standard scan, and predefined. Just click on predefined. And right at the top, new 52-week highs. So 166 New York Stock Exchange, 90 on the NASDAQ. One of the things I'll do is I'll look at the New York Stock Exchange like this and then sort on the scooter column and then go down below 90. Now, there could be some really good breakouts in here with scooters in the 90s, but I think you might find more that have maybe consolidated for a while and then are breaking out if you look below 90. So that's where I started for the chart breakouts is I started looking at both New York Stock Exchange 52-week highs and NASDAQ 52-week highs, and then looking further beneath 90 on the scooters. So all these that I give you are going to be stocks that fit that criteria. So let's start first with KOS. Now, I said energy is not a huge, I'm not a big fan of energy, but we did just get a breakout on the smaller company, Cosmos Energy. And I like the pattern. After moving up, we sideways consolidated here for a while, and then we just broke out. Volume picked up on the breakout. So this is one short term that I think could ride a little higher. Any pullback to the rising 20-day moving average, I think, would be a great entry. KFY, Corn Ferry, I talked about this one recently when they came out with earnings. They came out with great numbers. I think the stock overall has been a pretty good performer, but it had been consolidating. So I wanted to see if we'd get the breakout with earnings. You can see that volume spike, and we did make the breakout. Again, I think a pullback, anything down below 70, down all the way to that 20-day moving average, I think is a solid entry point here. Next up, CRK. This is Comstock Resources. Lots of sideways consolidation, unable to get a close above 660 until today. Volume picked up. We got to close at 679. This is one that could run. Danaher, DHR, another one that's been sideways consolidating. You can see April and May, multiple tests around 260, couldn't get through. Look at the volume picking up. Now we're through 260. I think DHR goes higher. Zuo, this is Zora. This is in the software space. Software has been picking up, and Zuo is now one of the leaders in the area. So let me show you the relative strength, which has been picking up on the stock right here versus software. Beautiful move up here in June, and it's threatening a relative breakout. And we just got the absolute breakout, closing up at $18 or thereabouts on Wednesday. So Zuo looks pretty good. DHT, this is DHT Holdings. You can see the move up here in March, close to 660. Another almost test in late March, came all the way back up to start June, right around 660. You can see many tests right up in here. Finally, today, volume picks up and we break above 660. I like that breakout there on DHT. Cowan, COWN, this was a portfolio stock of ours last quarter. Did pretty well for us. Made a breakout today. Look at that volume picking up, clearing the prior highs. And this is without much support from financials. So clearly leadership is very strong here and it's turning back up again. All right, MDRX. This is Allscripts. Beautiful move up. And look at this cup. I mean, it's almost a perfectly rounded cup from 18 down to about 1475, back up to 18, little handle back to that 20-day moving average. And now looks like we're just getting that breakout to the upside. So I think Allscripts looks pretty good here. That measurement would be roughly $3.25 from 18. So it'd be about 21.25 would be your measurement there. CTAS, this was the Earnings Beats Digest newsletter article this morning. Just mentioned we got this nice breakout. You can see the volume starting to pick up on this breakout, and we continued it today. When I was doing my show earlier, this actually was one of the stocks. This stock, when I pulled it up, was down right at the open today. But you can see that we did recover pretty strongly by the end of the day, set a new high. And I think Cintas goes higher. I would watch that rising 20-day. I think that should offer up great support on any pullback. But I do like this breakout above that 367 level on CTAS. And again, that was in the Earnings Beats Digest. So if you came in late, you can go to earningsbeats.com, sign up for our free newsletter, name and email address, completely free. All right, let's keep moving on here. CTAS, let's do the next one, which is CPRT, Copart. Another one that has been consolidating for months. You can see the high all the way back in November. And then the sell-off back up above 128, got close. Here we went all the way to this high, couldn't get through. That was at the beginning of June. Pulled back one more time, and now we have made the breakout. Look at the volume pick up as we went through the 130 level. So Copart, another one that has been consolidating for a while and just made a breakout. Costco, sideways consolidation for the last 2 months, just broke out. Would have liked to have seen a little bit more volume there, but I do like the stock. I like the pattern. You can see the high over here above 385. And then for 2 months trying to get through this 387 area, couldn't do it. Now we're finally through it and in the 390s. I think Costco looks good. RDWR, this is Radware. I believe I mentioned this one earlier to members in the daily market report. We had a big breakout intraday. Look at that volume. Pulled back. We did not make the breakout on the close, which tells me maybe we're going to pull back one more time. But I do think that rising 20-day holds, and I'd be looking for the stock to then turn back out up to the upside and breakout. Now, occasionally, and when you're looking at 52-week highs, you see stocks that have false breakouts. And this is, this Radware is one that certainly qualifies with big volume, having the breakout intraday and then not closing there. Another one that I would be a little leery about in the near term would be ARWR, Arrowwood Pharmaceuticals. We had a big resistance area, 90 to about 92.5, went up, tested the 90 level just a couple weeks ago, pulled back, and then today, intraday, the volume was picking up. We had a breakout intraday above this prior high and then came down and closed on the low. That is normally not a good short-term sign. If it's a stock that I had owned and was trading and thought I was getting a breakout and then didn't, I would have sold at the close today. I think in the short term, we'll probably head back down, fill this gap again, maybe hit that 20-day. So I think I've moved back to about 83 and change is something I would be looking for here. All right, moving on. How about earnings spotlight? So we had a few companies report after the bell. First one I wanted to show you here is Concentrix company. Let's see here. Got the earnings somewhere. I'll get that for you in 1 second. But this is, when you look at the chart here, you can see it's in the software area. It had been it was at a 52-week high relative to software right in here, and then went through this whole consolidation period. So we haven't seen the breakout. And in fact, we've pulled back a little bit, which typically happens when a stock consolidates. But I do think that we are more likely than not, going to head higher here. And so that's what I would be looking for with CNXC. Now, they did come through with their earnings. They posted $2.37. The market was expecting $2.26. So that was a nice beat. Volume's been strong. Like I said, prior to the consolidation, relative strength was strong. It was down 2% last time I looked after hours. So this is a stock that maybe comes down and tests that 20-day. I wouldn't be surprised, though, to see a recovery off of that gap to the downside and perhaps even a breakout. So CNXC is one that I would keep a really close eye on. Strong numbers, beating estimates after the close, and a stock that up until its recent consolidation was one of the leaders in software. All right, next up, KB Home. KB Home reported, and they came through with their earnings as well, $1.50 versus $1.29. But home builders have not been very strong of late. And you can see KB Homes had just come up, tested its 20-day. After the bell and after earnings came out, the stock was down about 4.25%. So we're talking about maybe $1.80 or $1.70. That will take us back down to maybe around the 41.60 level, which potentially could be a breakdown. I would be careful if the stock opens. I'd be careful anyway, just because this whole group has been downtrending. But any kind of a move below 42 at the open, I think probably signals more selling ahead. So KB Homes, I would be careful with. Third stock that reported after the bell is FUL, which is H.B. Fuller Company. Stock had been doing pretty well. It's been consolidating, pulling back in this range. Looking at the relative strength, it had actually been a leader among its peers. Stock is down, or was down, about 2.33% after hours, which would be somewhere about $1.50 or so, something like that. So it's probably going to take us down to around 64 if we open where it looks like we may, based on after hours. So I don't like the way this one's shaping up, trading below the moving averages. You can see we're getting that death cross with the 20-day moving below the 50-day. I would be a little careful with HB Fuller. At least let the stock, rebound and get through those moving averages before getting overly bullish there. The last one I have for you is SCS. This is Steelcase. And of the four, this is the only one actually that responded positively after its earnings. And Steelcase reported its earnings of, actually there was a loss of 24 cents. And I think the estimate was flat. I'm not sure if the estimate was flat or if it's just not showing me a number here. But anyway, Steelcase did report a loss of 24 cents. And the reaction, though, was pretty positive. Stock up 5%, almost 6% after hours, which would take it up, 5% would be about 70 cents. So maybe about 80, 85 cents, it looks like, which would take us to about 15.35 right in this area. I think anything above, let's see here, we opened at 14.99. Here we opened at 15. Here we opened 14.97. I think anything over $15 would be pretty bullish for SCS. So let's see if we can get that breakout on tomorrow's open. All right, let's move on to the three you must see. First, I'm going to show you a stock that has pulled back. Doesn't look overly bullish, but it is near key support level. Let's start off with Citrix Systems. So we gapped down with earnings back in April, kept moving lower, got down to about $113, bounced to 122, and now over the last couple of weeks, we've moved back down to this 113 area. You can see back at the end of October, early November, 112. We never closed below 112. We had some intraday moves down to about 110. It just seems like we're pretty close to a key support area on Citrix. This was a stock that before earnings in April was up around the 140 level, and now we're at 113. Will it start to make a move toward its earnings that'll be out next month? I don't know, but it is near a key support level, so just wanted to point that out. Next up, Stitch Fix, SFIX. The stock had made a huge move, nice gap up here in June. I believe that was with earnings, and then we pulled back and came right back to this gap support area and close to the 20-day, actually testing the 20-day today. This is an area where I would expect the stock to turn back and move higher from this level. So we'll see what happens from here. But any close below about 57, I'd be nervous with Stitch Fix. But otherwise, I would expect a rebound. And then the last one I have for you, I want you to look at this pattern. This looks like a beautiful bottoming pattern to me. Butterfly Network, after, about a year ago, it went public. Huge volume spike back in November, ran all the way up to $29, and then we've been in this huge downtrend. But what I see is a left shoulder, neckline at 15, lower low for the head, back to the neckline at 15. Here's your right shoulder. We've already had one false breakout with volume picking up. I think we bounce off this 20-day. Close above 15 would be very bullish. All right, want to thank everybody for tuning in. I will be back next Monday for your next Trading Places Live over at earningsbeats.com. Hope everybody has a great Thursday. Enjoy your weekend ahead, and I'll be back next week. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.